Okay, welcome everybody. Welcome to the VectorVest Stock Health Clinic. My name is Russell Markham. I'm the Director of Education for VectorVest Asia Pacific, and it's my pleasure to have so many of you along today. So let me know there in the chat box on YouTube. I think we're also broadcasting across GoToWebinar. Let me know, am I coming through loud and clear? And this is all about you today. Stock Health Clinic here by VectorVest. This is for Australia stocks, so we're going to be looking at Australia stocks today. So get your Australian stocks ready and we'll take a look. Okay, so here I am on camera. What I'll do now is I'll transition over. So I've got a fancy little program here that allows me to transition to different camera angles. Here we go. I've shrunk myself down and we can make it a bit more interactive as a result. Just second slide here, disclaimer, please note this is not to be seen. Let's see, I might be totally in the way here, so let me see if I can transition it here, take myself off. This is not to be seen as personal financial advice, all right? So we're not licensed to give advice, we're not financial advisors. Please do speak to your financial professional. I'll be using the power of the VectorVest system today to analyze your stocks for you. And it's a good bit of fun because, you know, we can really put together a wonderful watch list by the end of the session. And then it's up to you as to what you want to do that watch list. It's not to be seen as financial advice. I'm not licensed. You can then take those stocks and analyze them further as you see fit. Okay, so I've transitioned now to the other screen and let's get into it. So what I'll do here, I'm just going to click on VectorVest. So this is VectorVest 7 that we're going to use to analyze our stocks today. Okay, so we can use the power of VectorVest 7. I see we've got a lot of new people from around the world, so thank you. Just let me know in the chat boxes there, where are you dialing in from today, tuning in via the power of the internet, where you're coming in from today, because I know we're broadcasting around the world on YouTube. Isn't it amazing, this technology that we've got now? Okay, so what I'll do here is I'll move it over so we'll maximize the screen, just easier for you to see. And I've now moved it over here for us. All right, yeah, let me see some of the comments here. So, yeah, most of you from Australia, Melbourne, Brisbane, Melbourne, so Sydney, so quite a few of you from Australia, and I see a few of you also dialing in here internationally. All right, so welcome. I hope you get a lot out of this session here, analysing Australian stocks. Okay, without further ado, this is the action plan for today. So I'll just jump back to my slide sets here just to show you the action plan here. So let's bring this up here. Okay, so our action plan is as follows, our agenda. All right, so we're going to define some of the key definitions. I've decided as I go through and analyze the stock, I'll define some of the key definitions rather than bombard you with all those definitions up front. We'll do it as we analyze. And then we're going to put some stocks into watch lists. So I'll do number 1 and number 2 at the same time. And we're going to analyze those stocks. Whoops, let's say analyze a set of stocks, and then we're going to clean up the watch list. Okay, so without further ado, let's get into it. So I'm going to click on viewers here. Okay, and so this is our viewers tab here in VectorVest, and we've got a watch list viewer. All right. So we've got a watch list viewer. You can see here some of the recent watch lists I've been looking at, you know, insurance and iron ore, and nickel and cobalt, for example. All right, so I've been looking at some interesting stocks, but this is all about you today. So what I want to do here is I want to make sure that we can look at your stocks. So without further ado, what I'm going to do here is I'm going to come in here and I'm going to bring up the stocks here that you're going to look at for today. All right, so I'm going to click on a new watch list or new group. I'm going to create a folder if you wish. So we call it group. And from that group, what I'm going to do here is I'm then going to give it a name. Right, so Stock Health Clinic, and the date today, 11 December 2020. How about that? All right, so I click add. It's going to set up the group for us so we can get ready to analyze. And now we'll create a watch list within that group. All right, so let's call it Stock Health Clinic, 11 December 2020. Here we go. So we're going to create that watch list. This gets us in a position now where we can get ready to analyze those given stocks. All right, so at this point here, what I'm going to do is I'm going to call in from the audience to give us some of your stocks. Now, leading up to this webcast, I've had quite a few of you email through to me and say, these are the certain stocks that I want you to have a look at for me. So I'll put it there to the chat box there. You guys put the stocks to me, and I'll certainly do my best to keep up. All right, so straight off here, some of the ones we've got are as follows. All right, IEL.AX. I see Michael there, you're quick off the mark there. You brought in VUL. So just to show you what we're doing here in VectorVest, I'm putting in .AX. This is telling VectorVest that this is for Australia. All right, so I'm putting in, you'll see here I'm adding in my stocks into my watch list to begin my analysis. All right, Nadine, thanks for that. You did give us a US stock. For today's session, I'm just going to keep it for Australia. I'm happy to do this session again where we do it, for example, just for the US, but just for today, I'm just going to keep it to Australia. All right, so just give us any stock there for Australia. So sorry, I'm not doing US today, but if we get a chance at the end, remind me and I'll have a look and plug that into the US. All right, SAR has come in here from Patricia, Jin from Nardine. All right, that's a good one. HLA. Whoop. Oh, HLA, is it? .AX, there we are. I got that one right. HLA, SVY, MTH. All right, a few of the other ones coming in. IEL.AX. I'll tell you what, the power of technology here. You can see me how it work. I'll transition the camera back onto me just to make sure that that this is live. I'm going to push enter just to fire them up so far, just so I don't lose that list. All right, so I'm looking down here on my email printouts. So you'll see me on the screen here. Hard work here, looking at the printouts here I've got from a few of you who've emailed me in advance. So thanks for that. So good old Westpac there. All right, so PPT, CCP. Now don't worry if you've given us a code that already exists. We can't double up, so that's fine. So SLR was another one. MCP. Let's see, what have we got? TP, just welcome, touch type, KGN, or just about JBH. Just make sure I'm not making a mistake on the codes here. JBH, yep, that's an interesting one. AMP, let's push enter just so I don't lose the current batch. So you see I'm just pushing into my keyboard, it's populating as we go. I just don't want to run the risk of losing all this. So FMG, MIN, yeah, some good ones here. ASB, come in here. So Mervyn had asked me to analyze a few of these ones here. So thanks for that, Mervyn, the email earlier today. Sorry you couldn't make it today, but don't worry, you'll get the recording. OBL, let's see, ADH, VMT, and what else we got here? PPE, AVA. All right, enter. What are we up to now? So we've got a total of 31. Let's just keep my eyes on here. David asking me here for FFR from YouTube. Thanks for that. It's good to make sure it's all working on YouTube as well. Isn't it amazing the technology? We're broadcasting over GoToWebinar today and YouTube channel for Australia and the YouTube channel for America. So to our American attendees today, as part of the VectorVest family, we're a global setup now, of course. Welcome, thank you for coming along. I'm really pleased to see the interest in Australian stocks. All right, and let's see, keep my eyes going. All right, a few more coming in here. Hopefully I'm keeping up with you guys. RMS, Notes Nardine, WA, OZL, good old Oz Minerals. I bought that company back in the day when it was Oxiana. Too bad I didn't hold on to them for a lot longer. MQG. All right, okay, so let's push into there. Just keeping my eyes peeled on all the different platforms, making sure I'm keeping up with you guys. All right, 37 in total. All right, if there's any more, just keep them coming. I'll do my best to put them through. Let's see here. Yeah, have we got this one already? NCM just come through here. Newcrest. All right, so I've made sure that that's in there as well. All right, ALI. All right, another one's just come through. All right, I think I've got just about everyone's in here. Don't worry if I've missed your stock, because the beauty is that At the end of this, I'll show you where you can go if you're new to VectorVest. You can take it a Trough, 10 bucks, 10 US, call it 13 or 14 Australian dollars. You know, it's barely a cup of coffee and lunch these days, is it? And you can do it for the next 30 days. You can do this analysis and analyze thousands of stocks should you choose. All right, so all is not lost. If I've not kept up with you, my apologies. I am trying my best to put them all in. All right, so we've got 38 in total. Let's do this. Let's minimize me now. I think, yeah, we've minimized me. We've now got a maximum screen. So that's just double checking the different social media platforms here. Yep, all right, so we've maximized the screen. Okay, now without further ado, what I'm going to do, in fact, I'll transition me back because I won't get in the way just yet. All right, without further ado, I'm going to show you some incredibly powerful analysis that you can do now using VectorVest. All right, so what I'll do here is I'm going to make a copy. All right, because, you know, like back in the day, remember at school, or if you did science at university or college, whatever it might be, do you remember how you'd always take your test case and you keep that as a test case, and then you'd make a change and you compare that always to your test case? Well, this is what I'm wanting to do here. All right, I'm wanting to show you what we had before and then what we're going to have after. All right, so this is the copy I'm going to work with. Now, if I go to the original one, which is exactly the same as copy, but I want to come down to the bottom here before I define any definitions or anything along those lines, and I want to do something of interest here. I want to come down to the bottom line here. This is the average of all 38 that you've given me. All right, just keep my eye on, I think we've caught up with everyone. All right, all 38 here. If I come down to the bottom here and I right click, I can view the average watch list. So what I mean by that, the average of all the stocks that you give me. So I'll just change the layout. I'll make it nice and simple to begin with. So VectorVest simple on the graph layout here. Don't worry, we'll cover that shortly. Let's just minimize that for now. And I'll turn off all this for now. And I just simply want us to look at a 5-year view. I'll pull it back 5 years. A 5-year view of the stocks that you've given us. All right, so this is the 5-year average. All right, now when I look at this over here, I'm just keeping my eye on the questions. Yep, we're all good for now. So if I'm turning my head, I apologize. It's just I'm looking at another monitor to make sure I'm interacting with you guys. It's not bad. I mean, your portfolio on average wasn't too bad. A little bit of volatility here coming into 219, but what portfolio didn't have that, or should I say coming into 219? Quite a few had a bit of a sell down, but I think it's fair to say that most of us would not have been happy with this, right? You can see here you've had massive drawdown take place over the coronavirus market sell down. So you went from an average of 15 to a low point of 7. Ouch. So it's, you know, it's like a 50% drop. You know, it's not easy going, is it, on your nerves? And then it's recovered nicely. It's come back and just about hit a new high. Well, what if we could improve things a little bit here, where we could iron out some of that volatility? What are the problem children, so to speak, in this portfolio? What are the problems in the portfolio? How are we going to sort it out? Can we make it better? What can we look to do? All right. So without further ado, I'll concentrate on the very top stock and then I'll compare it to the bottom stock. And I want to show you 1 or 2 key definitions. All right, so and this exercise is fun. When you see how we do it here, you'll go, I wish I'd looked at a stock in this way years ago. Let me show you why. Graph the first one here. Fortescue Metals. All right, pretty nice chart. Price pattern going up, very nice. Clean all this up for now. Just take it off for now. There's a lot of great functionality you can do on VectorVest. I just want to look purely at the price pattern. So, you know, if you go back, say 4.5 years ago, $4.88 Australia, and now it's just breaking through the $22 mark. Phenomenal. All right. You know, over that 4.5 year period over there, you've made yourself a small fortune in terms of returns, right? There it is over 5 years. All right. What's driving the stock? Why is it going so well? Well, to Australian subscribers who read the VectorVest views each week, and to our international audience, have a look at the VectorVest weekly essays in VectorVest. If you're subscribed to VectorVest, have a look. I did a good write-up this week on iron ore, and Fortescue Metals is heavily into iron ore. It's pretty much that's what it's all about. And those of you that have been watching the spot prices on iron ore, it's pushing, I think it's, what's it now, about 145 US dollars a metric ton, I believe is the terminology. So, you know, it's up at the start of the year, it was about 60 a metric ton. So it's doubled its spot price. That certainly helps fuel this company in terms of returns. Okay, well, having said all that, and this is what I love about VectorVest, I'm not going to drill into endless stories about, you know, what the board of directors might have put out in terms of an outlook versus, you know, what UBS analysts are saying versus what Goldman Sachs analysts are saying versus what newspaper articles or blog posts are saying. I'm going to let the mathematics, the power of VectorVest, we're going to let the mathematics speak to us. All right. In the past, when I first started investing, I used to waste endless hours looking at, you know, TV shows on investing and reading endless blog posts and, you know, calling up the directors. You know, you'd call up the chief liaison type officers and ask to be escalated to the highest person you could possibly get your hands on and ask some questions because you were desperate to know whether you were making a good decision or not. Now, of course, they weren't going to tell you anything they weren't allowed to tell you, only public information, of course, but, you know, you were desperate to try to find out information. What I needed was a system like this. So let me show you. Know it at the time. Now that I've got it, I'll never go back, right? This is what I'm after. What are the earnings behind this company? Now, at VectorVest, we have this EPS indicator. So to our subscribers, of course, you know this very well. For those of you that are new, just in the chat boxes here, so, you know, on YouTube and on GoToWebinar, let us know, are you brand new to VectorVest? All right, I'm just trying to gauge the audience here because yeah, I see quite a few new names here, so a few of you are new. So at VectorVest, we have an EPS indicator. It's a 12-month leading forecast on earnings. So what we're saying is this is what we're forecasting earnings to be in the next 12 months. If you are buying into companies, and I'll put my freehand line here, with growing, rising earnings, let's just make this jump out a bit better. All right, so if you're buying into companies with a rising set of earnings, it bodes well for future share price appreciation. Makes sense, right? Would you rather buy a company making more and more money or a company making less and less money? Well, of course, more and more money. You'd be surprised how many investors out there don't understand that, and they buy into companies with falling earnings and then do not understand why the share price is falling. And often here in Australia, we hold on to companies for good dividends. So we've had a few companies over the years paying us 5-6% dividend yield, phenomenal. But when those earnings start dropping, the dividends typically go with it as well. Makes sense. Company making less money, less ability to pay out those dividends. So that's what I like to see. I like to see a rising set of earnings, right? Let's flip it on its head and go down to the bottom one. So I'm not sure who gave me FFR, and again, I'm not reading out names here. If you're shorting it, great, you're probably having a good time. If you're going long, maybe this one's providing you with a lot of frustration. Okay, so how did I know it's under a bit of trouble? This is our bottom ranked stock by fundamental and technical analysis. So just to set the scene here, the reason why Fortescue Metals is at the top of the list is because the VST, right? The VST score here is the highest. So the VST score here is the best combinations of both fundamental and technical analysis. I'll cover that very shortly. All right, there's different components behind it, but let's just look at this figure here, VST, value, safety, and timing. So it combines fundamentals and technicals into one master indicator. It's on a scale of 0 to 2. So higher above 1, the better that company is on average. All right, so you can see Fortescue Metals right at the top of the list. If I come down to the bottom here, you can see here, Firefly Resources, VST on a scale of 0 to 2, 0.68. We want to be careful about companies where the VST score is below 1. You'll see here too, it's also got a sell rating on it as well. Now, just a word of caution on the buy, hold, sell ratings that we put into the VectorVest system here. We're not saying that this is a verb. Think of it as a noun. It's a noun, right? It's a naming right as such. All right, we're saying it's sell rated. Sell rated shares are having a few things that concern us currently. Buy rated shares have a lot of things going in their favor currently. It doesn't necessarily mean you're going to rush out and buy that stock. It means that it bodes well for further analysis, right? So that's how we look at it. We prefer buy rated over hold rated, but nothing wrong with the hold rated a lot of the time, but we want to be very careful about sell rated shares. All right, so Fly Resources here. Let's graph this one here. All right, now let's do the same deal 5 years back. All right, do you like the set of earnings in this one here? Wow, it's not very pleasant to look at, is it? I mean, if you compare that to, let's just put it side by side again. Here's a little trick. I will do this. I'll put the two side by side. All right, so I'll maximize that. And what was the ticker code for that one there? FFR. All right, put this one side by side just to show you. All right, there we go. Pull that back 5 years, just on 5 years as well. All right, so there they are, both back 5 years. You know, which one do you prefer? I'll just clean this up just to make it easier. All right, how about that? All right, there is pretty difficult looking set of earnings, I guess, for a better term. It's a much easier set of earnings on the eye, isn't it? All right, so I just want to show you that. All right, now I'll close this one out and bring back Fly Resources. So as you can see, if earnings continue to remain sort of all over the place, not rising, you can see that this company starts to get itself into a bit of difficulty. All right, let's close out of here. Let's go back up to the top of this. All right, so we've covered VST, value, safety, and timing. It looks at the combination of both fundamentals and technicals. Now, I want to drill into the components behind fundamentals and technicals. These two indicators here, RV and RS, relative value and relative safety. Now, without getting too deep into the definitions, because I'm mindful that quite a few of you are new today, so I don't want to sort of overload you with information overload. We've got all the definitions in the VectorVest system. So if you ever get stuck, you just simply right click on any given stock and you can fire up a view full stock analysis report. Let's do this. Let's transition here. So give you a bit more real estate to look at. All right, so we'll then go through all of, in fact, hang on, I'm going to cut over. Here we go. There we go. I think I've now moved over. All right, here we go. So you've got all the definitions. You can see this is how the stock has performed over the last few months relative to the industry. So you can see the industry is booming and the stock is booming with that industry. All right, so that bodes well. It's buy rated. So the REC reflects the cumulative effect of all VectorVest parameters working together. These parameters are designed to help investors buy safe, undervalued stocks rising in price. So that's key to VectorVest. We advocate buying safe, undervalued stocks rising in price in a rising market. All right, so we want to buy those stocks in a rising market, and I'll cover that shortly. Just see a message here that I missed before. Julie noted, dialing in from Scotland. Wow, so thank you for coming along. Isn't it amazing, the internet technology? We can all meet up. It doesn't really matter where we are anywhere in the world. I used to live in Hong Kong. I grew up as a child in South Africa, and I've lived most of my life in Australia, and I've spent some time in New Zealand. So there you go, small world. And now technology doesn't really matter where you live now, does it? Okay, so let's have a look here. You can see here we talk about value, price versus value. So we can see price at $22.58, value of $38. We prefer to buy undervalued stocks. I'm not saying it's the end of the world if you buy a stock that's overvalued. You just need good reason as to why you're buying it. And if you're more conservative, you may err more toward buying an undervalued stock. All right. But anyway, I won't go through all these chapter and verse. It's there for you. I just want to refer you to it. All right. So you just right click, view full stock analysis report. Okay. All right. With that said, let's move a bit more into definition. So RV and RS, fundamentals. RV, looking at long-term price appreciation potential. All right. This is more important, this indicator, on a scale of 0 to 2. So above 1 is good. Below 1, we want to be careful. This is more important than comparing price to value. So often new investors say, well, you know, I'm not too sure because, you know, I've got an overvalued stock and I'm concerned, like Credit Corp, right? It's got a price of 24 and it's got a value of 18. So does that mean I need to sell it? And why has it got a buy rating? I don't understand. It's overvalued. Don't you advocate undervalued stocks? And it's got a buy rating. So at that point, this is what I say. This is a rating, buy rating, certain criteria being met, which I'll cover shortly. There's a little bit of a premium being paid. It's not a big premium. It's not a significant premium. It doesn't concern me. So it's pretty much a fair price compared to the value at the moment. If this was at $1.80 and the price was 24, I'd be concerned. All right, but this is not the case. All right, it's neither here nor there. All right, so this is important. RV. This is more important than price compared to value. So what is RV? RV is looking at long-term upside potential. So on the slide sets here, let's just see if I can jump into the slide sets here and bring this up. So I've covered, let's see here. So RV. RV is an indicator of long-term price appreciation potential. All right, and then I gave an example here of a given stock, which talks on about what its value is, but it's far superior than just simply looking at price and value. All right, so if you're concerned that your stock's a little bit overvalued, all right, look at RV. It's computed from the analysis of projected price appreciation 3 years out, takes into account AAA corporate bonds, bond rates, and risk. All right, so we're just going to jump out of here. I wanted to bring that up there for you to be aware of. All right, so first prize, undervalued stocks. If your stock is a little bit overvalued, it's not a problem, provided that you want to make sure that you've got a good long-term upside potential. Now, you can see at the moment RV for Credit Corp's a little bit below 1. All right, so its outlook is a little bit sort of a bit of a question mark at this point. Fortescue Metals, on the other hand, it's not only is it nicely undervalued, but look at that RV, a massive RV score of 1.74. Okay, on a scale of 0 to 1, we want that to be above 1. And then we look at how safe a company is with this indicator on a scale of 0 to 2. So relative safety, it's looking at the consistency and reliability of a company's financials. And again, I can get the slide sets to you. I've put all the definitions in there, but again, you don't need the slides because you can view the full stock analysis report and the definitions will be in there for you. So this is a safety indicator. So we can see Fortescue Metals got a good set of financials. Well, we saw that on the earnings, didn't we? All right, let's go look at Credit Corp. So right click here, view stock graph. It's just another way of doing it. All right. Does that make sense now? Where is Credit Corp's earnings going at the moment? All right, so let's not worry about these other indicators for now. Its earnings are declining. Falling earnings will lead to a falling share price. Now at the moment, it's kind of just sort of tilting to the upside, but don't fool yourself. If those earnings continue to decline, eventually at some point, that price is going to have to follow suit. Makes sense. The company can't continue to have falling earnings indefinitely. The price will catch up with it. Okay, so at the moment, this is a bit of a what we call bearish divergence. The earnings are falling and price is holding up. One just needs to be careful. All right, if you go back in time, this has been quite a star performer in recent years. There, the earnings were firing up. There, the price was firing up. Now the earnings have started to fall. Price has fallen a bit more after the fact, but price is sort of rallying up. I think investors are hoping it's going to sort of go back to the heydays. This concerns me that the earnings are still declining. This company is behind credit collection type businesses, all right, and also I think is it credit card types related type services. I'm not sure what's happening in your part of the world if you're dialing in internationally today, but I think it's probably quite similar to Australia. But I know for a fact that a lot of Australians have tightened their belts like a lot of people around the world. So what I mean by that is that they're not spending as much. All right, we've got some of the highest saving levels that we've had in years in Australia. People are tightening up. They're not prepared to spend as much. So for companies giving out credit cards or providing personal loans, it's been a bit more difficult for them. People less willing to get themselves into debt. And we're seeing that being reflected in Credit Corp at the moment on the earnings. All right, not on the share price. All right, but that will follow if earnings continue to fall, no doubt. We've seen it time and time again over the years. All right, so we put these two together, RV, RS, and then we also put RT, relative timing. Now, what I'm going to do here is I'm going to go to our copy. So just before I go to our copy, let's just remind ourselves of the total picture again. All right, so I'm going to go back 5 years. This is average of all those 30-odd stocks you'd given me. So the earnings weren't too bad, a little bit lumpy there, a decline, and then sort of tapered off a bit, and then the earnings. So this is the earnings across all 37, I think it is, stocks that you gave me, right? Big drawdown, as we saw here, which wasn't the best. All right, so we got some work to do to improve this. It's not bad, but we can make it a lot better. All right, with that said, let's go to our copy. So that's our base case. Now, as all good scientists, we make our changes and we compare to the base case to analyze the difference. So here we go. Here is where the stock health clinic really kicks in. So I'm going to teach you some powerful techniques to analyze your stocks and to improve your portfolios. All right. Right. So with that said, let's get into it. So what I'm going to do here, and I'm going to sort all of these companies by this indicator here called relative timing. All right, relative timing. Relative timing is looking at our short-term price momentum. So let me demonstrate. Vulcan Energy. Graph this one here. You'll see a common theme here in Australia. We've got a lot of energy companies. All right, this doesn't fill me with a lot of confidence on this company just because it's been 1 year and 5 months. All right, so I haven't got like a long track record of time. I want at least 5 years, as our founder, Dr. Bart DeLido, founder of VectorVest notes. You know, typically you want 5 years of information to look at. So we've only got 1.5 years or just on. So you just need to be aware of that. Earnings are declining at quite a rapid rate, yet share price continues to power on. Again, that concerns me. You know, it seems to be a bit of speculation that things are going to come off and people are getting in early and taking positions. I don't know. But what I'm going to look at now, that's from an earnings perspective, which is not the best, but from a technical perspective. So you might be saying, well, hang on, that doesn't make sense. How come earnings are falling yet the share price is going up? Fundamentals are not making sense, but your technicals make sense at the moment, right? Because you can see here, relative timing on a scale of 0 to 2, it breaks above 1 here. Look at that. So interesting when you look at that there. So from a technical perspective, it breaks above 1. Price at 22 cents, price now $2.35. So VectorVest nailed the technicals there. That you've got a technical breakout. You haven't got a lot of fundamentals currently behind this based on the earnings. All right. What I want to do when I find my stocks is I want both to be going in my favor. Right. So if we put Fortescue Metals back on, right, Fortescue Metals will have the earnings and the technicals. There, the earnings and technicals kick in. So you get a run from 11.25 until it has a breather to 15.86. Nice set of returns there. Here it breaks out again above 1, around about 16.89 up to 22.51. I'd much prefer doing that where I have fundamentals and technicals in my favor. Okay. So with relative timing in descending order, what I want to do here is I want to go and show you the stocks that are dragging your portfolio down. Right, what are the stocks that are dragging your portfolio down? Okay, so I'll just transition here. I'll just put myself back on camera for a sec there. All right, so here we go. Anything where you've got an RT below 1. These will be companies that are dragging your portfolio down. All right, so below 1. Here we go. JB Hi-Fi, big retailer. It's done really well in recent times. It's having a bit of a breather now. All right, so 0.94, and you'll see all the way down. Whoa, look at this one here, 0.14. Let me go and show you. So I'll graph these given stocks. We'll keep our relative timing on. All right, so earnings powering on, but this company's having a bit of a breather at the moment. All right, here's your technicals. Let's light it up a bit clearer here, and I'll right-click and change the style. So there's just some wonderful functionality you can do here. There we are. It's a bit easier to see now. All right, don't worry about buy, hold, sell ratings just yet. Okay, so here we go. What's happening here? Technicals are fading, and eventually the share price fades. Now, if you look carefully, you'll see the technicals started to fade around about here, yet the share price was powering on. This is a classic technical bearish divergence. So it's kind of like everyone's still partying on, but the music's been turned off. Eventually that party is going to come to an end, right? And that's what's happening here. So you're getting an early warning saying, whoop, careful, momentum slowing down, the technicals are starting to wane. All right, share price continues, and then it goes, oh, hang on. Yep, it's now to follow suit. So that's an early sign telling you just to be careful. Right, you overlaid with your earnings where you go, well, hang on, this is why people probably were reluctant to want to move to the sidelines. Well, we know the earnings are wonderful in this company and the outlook is still very strong. Just because a company's got an excellent set of financials behind it, an excellent set of earnings, it doesn't mean that from time to time it can't take a breather. So this is what this company's doing right now. It's taking a breather. I'm not as concerned when I see this. I get excited. I say, great, I'll move to the sidelines, wait for the technicals to resume, and then I'll buy back in because I know it's a great company with a solid set of earnings behind it. All right. But for now, if I was to own this company right now, all right, I'll just put my date line back on. If I was to own this company right now, it's telling me be careful. The technicals are waning, which means that the share price is starting to slip away. So, you know, wait on the sidelines. I can consider doing that. Again, this is not advice, all right, but I can consider waiting on the sidelines and then getting back in when the technicals fire back up. So this is currently dragging your portfolio down. Next one here. Makes sense. ASP, look at that. Technicals been falling for quite some time. All right, this one here, you know, I want to move to the sideline potentially. Consider it, right? Same with this one here too. Look, it's had a very good run, but what's happening here? Just starting to roll over. So again, just want to be careful on this one here. Despite the earnings, what are the earnings saying? Wow, textbook earnings. What's the problem? Fundamentally, this company is phenomenal at the moment. Its earnings are going gangbusters. Why is it having a breather? Well, it can't keep going indefinitely. No stock can keep running indefinitely. It has dips. Even some of the world's best stocks like Microsoft and Amazon and Facebook, even those stocks with almighty earnings behind them will have a breather from time to time, and therein lies your opportunity. Okay, so you'll see this one here, this one here. Ansell's having quite a big breather at the moment from the looks of it. Kogan, this one's been a fairly volatile stock. When it booms, and when it busts, it falls quite hard. You'll see this in recent times here. So rocketed off and came off, sort of thing, and then rocketed off, came off, rocketed off. It's having quite a big pullback again. All right, so let's bring this into a year just so you can see it. All right, so I'll just whip through them here. So can you see that pattern? The technicals are slowing down. This one here is really having a big breather at the moment. Zuno Group here. All right. So based on everything that you've seen there, why would you be wanting to hold on to these ones currently in your portfolio? All right. So this one here, McPherson's got one of the lowest RTs of them all. It's got the lowest at 0.14. It really turned the corner here and it's gone down at a rapid rate of knots. Okay, so with that said, here's my first concept that I'm going to teach you toward analyzing your stocks and improving your portfolio. We're going to take any stock out where the RT is below 1. Now, when we get new subscribers doing this, one of the biggest holdbacks, and for myself included when I first did this, I can't get rid of JB Hi-Fi, because I kind of picked that up at 22 bucks, and even though it's at 44, I just can't get rid of it. Or I can't get rid of Kogan. No. You know, I went to the shareholders meeting the other day, and I met the CEO and the CFO and had a great chat to them, and I really believe in that team. And I read the latest prospectus, and it looks amazing, and I can't let go of that company. Right? You're letting emotions cloud your judgment. So if that happens, do this: hide them. Just crunch them up, or you can remove them altogether so you can't see it. You might even have to hide the share price because you might be able to recognize the company on the share price. So you can hide your columns, or you can actually remove the columns altogether, right? So you can right click and you can remove those columns on the layout should you choose. All right. So I'm trying to remove emotion here. My rule is RT below 1. I want to move them to the sideline for now. I can always buy back in, right? So I'm going to delete the selected. So straight away, I've removed some companies out of the 37. I've whittled it down to 23. Let's go and look at the watch list average line. Let's just have a quick look. So now let's compare that. I'll pull that to one side here. Let's compare that to what we had here. All right. So this was the base case. Let's put it back 5 years. All right. This is before any adjustments. So huge pullback on the technicals and up, then waning again. All right. This is what we've done now. So this compare apples to apples. Here's a 5 year. Still quite a big drop there. Big shoot up here. All right. Marginal as to whether we've improved anything just yet. All right. Okay. Let's keep going. But what we've done here is we've removed the technical laggards in the portfolio. We've got a bit more work to do. But see how quick and easy that was to sort by RT, drop the ones where the RT is below 1. Right, next thing I want to do here. Let's go and find companies where the earnings effectively are starting to fade away. Now, what we could do, the one way you could do it is to go through your graphs, like we looked at Fortescue Metals, and put on your earnings, and then just go and pick on companies where the earnings are starting to fade away. I've got a quick way of doing it too. Got this indicator here in VectorVest called GRT, earnings growth rate. What's the company looking to grow its earnings by? GRT, incredibly powerful indicator. All right, so look at that. Ava Risk Group here, 32, Min Resources, Phoenix, look at that, Fortescue Metals, the one that we really like to look at today at 27. These are phenomenal numbers, all right? And just a word of caution, a company cannot continue to grow its earnings by 30-40% indefinitely, all right? Because it only takes a couple of years and it'll be the biggest company in the world potentially, right? So, but while that company is growing its earnings at these massive rates, that's when we want to consider being in those companies, all right? And I'll just transition back here. All right, so that's when we want to be into those companies. Where we don't want to be in those companies is when effectively the growth rates start to decline. Okay, so when the growth rates start to decline. Okay, so, and thanks. Keep the questions coming. Some good questions. We'll cover them at the end there. All right, so look at this. Jumbo Interactive, negative. All right, all the way down to Flight Centre, right? So these are companies where we've got negative growth rates. If I graph these selected companies, all right, and I'm going to bring on the earnings now, bring up the area, pull it back, just because we're looking at in current conditions. So you can see here, look, it just started to decline. Falling earnings, we can start to see a falling share price at some point. All right, time again. I've got to make that point clear. Falling earnings will lead to a falling share price. All right, there's only so long it can defy gravity. All right, look at that one. You can see there's critical. Wow, real big drop there. Be careful. All right, this one here is textbook, perpetual, starts falling, down goes the share price. All right, you often get investors that try dollar cost average. Buy here because it's so cheap. Buy here, it's so cheap. Buy here, it's so cheap. Buy here, it's so cheap. Why do you want to continue to buy into this company when the earnings are falling? Okay, AMP, this one here has been a real contentious one here in Australia for a lot of our investors. All right, I think a few people are getting excited because, you know, look, it's finally coming up in the share price. The earnings just starting to turn the corner, but if you look at it over a longer time period, those earnings are still pretty anemic, and it's got a negative earnings growth rate. Okay, so you'll see here, look at that. Oh, I mean, the one there, that's a massive drop off in the earnings. All right, why do you want to be holding on to these companies? All right, this is going against us, it's going up, but the GRT outlook's negative, the earnings outlook's negative. It's the technicals firing this one up. I'm looking for both in my favor, not just one. All right, look at that one there, Flight Centre, for obvious reasons, right, in the flight industry. Okay, so again, let's do this. Let's delete selected. All right, so we'll take that out. What do we got now? 13. Let's come down to the bottom here. Let's view the watch list average. All right, so we are improving things. Ooh, look at that, much better shape on the earnings there. Let's pull this back 5 years. Right, so wow, look at the trajectory of that growth. Now we'll throw our relative timing on. All right, it's not looking too bad. RT sitting above 1 most of the time. Bit of a pullback there on coronavirus, but up it comes again. Wow, so, you know, we started to really clean this up. let's compare that. Right, let's go back here. Let's compare that again to what we had here. Right, going back 5 years. Okay, so there's your earnings, there are your technicals versus what we've just done here. So we've polished it up quite a bit. The earnings are much better now compared to that set of earnings there. All right, with that said, we've got a bit more work to do. This is fun. You see, it's not taking a long time. So to speed things up, you just simply have sorted it by RT, dropped anything with the RT below 1, sorted it by GRT, whittled out anything with a negative GRT. All right, next thing I want to do here, as a conservative investor, I'm going to be a conservative investor. I just want to make sure that my company financials on average are pretty solid. Okay, so I can see over here, if I sort of buy RS, relative safety, looking at the consistency and reliability of the company's financials. Well, if I come down over here, I can see anything where an RS is below 1. Right, so these here are below 1. So just to show you, if I fire these up, all right, aristocrat. Even though the earnings growth rate, the GRT, is still positive in terms of the outlook, right now the earnings are falling. Let's just see, I'll maximize that screen there for us. There we are. Okay, so I can see that the earnings are falling. Why do I still want to hang on to this one? So, you know, sure, the outlook is better and things are starting to improve, but the earnings are still under a bit of pressure. All right, so I'll jot that one down. This one here, pull it back a wee bit here. The growth rate, should I say, the earnings profile certainly doesn't strike me as a type of company that I'd be chasing from a long-term outlook as it stands. All right, let's keep having a look here. PPE, it's gone a little bit sort of sideways and down. So again, that concerns me a little bit. I just want to make sure I'm getting the best. After all, it's your money. All right, you want to get the best returns for you. This is not a great set of earnings, but I do like the fact that it's gone pop up here. All right, so this one here would be sort of a question mark next to it. You know, not that one there. You can see the earnings there have gone sort of sideways and flat. So I'll jot that one down, SVY. You know, ideally I'd like 5 years worth of data, so I'll drop that one out as well. Okay, all right, so it looks like I'm going to get rid of everything except for, which was it, OBL. I think I said I like the little pop in the earnings and that. All right, so I'm going to take those ones out. Okay, so here we go. So let's see here. Just make sure everything's on here. Okay, so here we go. So what do we look like now? Come down to the bottom, right click, and view watch list average. Okay. Go back 5 years. I like to look around about 5 years, just give myself a good picture. Look at those earnings now. That is just beautiful in terms of those earnings. It's sort of textbook, a little bit of a breather there, but wow, those textbooks, those earnings are absolutely textbook when you look at it like that. Why has this portfolio gone up? It's because the earnings have gone up. All right, let's throw the value on. Right, it's been nicely undervalued for most of the time too. Let's throw in our GRT. So capital appreciation and GRT, earnings growth rate. Right, so all the parameters you've got here in VectorVest. Wow, look at that, 23%. That's what it's currently looking to grow its earnings by. And, you know, here's the thing, you know, investing can be easy, believe it or not. A lot of investors are just not taught this, so it's not made easy for them. But when I show this to a lot of investors, they never look back. They go, wow, for the first time ever, I'm consistently making money. If you can buy companies that are continually growing their earnings, where the earnings growth rate is nice and robust, I'm not so worried about the profile here. It's the number I'm after. Even there, you know, you say, oh, but the growth rate's falling. It's still 6%. It's looking to grow its earnings by 6%. As long as those earnings growth rates are positive. All right, this is the key one here. You're setting yourself up to make some good money, right? Relative timing, right? Most of the time, this portfolio's technicals have been above 1, which tells us that the momentum is strong. All right, so having done that, I'm going to show you a few little extras in here, and then we'll get into Q&A very shortly. A few little extras to polish it up. when you look at this, you say, okay, great set of earnings. I'm looking down the bottom now, it's undervalued, good RV, good RS scores, so the fundamentals are strong. Technicals are currently strong. All right, we've got another little indicator here called CI, really important indicator. Great indicator. Our founder, Dr. Bartolito, really likes this indicator. It's incredibly powerful. It's purely a technical indicator, but it tells you whether, it tells you how resilient, that's the term I'm looking for, effectively how resilient is your stock, or in this particular case, your portfolio. So it's looking for companies testing higher highs and resisting severe and or lengthy declines in price. So if I do this, we'll keep our earnings on because we can see those wonderful earnings, and I'll add parameter and I'll put in the comfort index. Right, again, it's on a scale of 0 to 2. Have a look over here. If your CI is above 1, that bodes well for the current portfolio as it stands. Right, so you see here it started to break up above 1. So the average portfolio value was $3.57, and it held up all the way up to about $3.53. It peaked up a bit. There it was telling you it was going to have a little bit of a breather, bounced up again, a little bit of a breather, bounced up again. But over here, look at this, breaks above 1 here. Right, so you've got all this massive engine behind you in terms of those earnings. Now the CI starts to light up and has a really good run here, 8.50 all the way up to 11. All right, with that said, this is an appropriate time now to talk about market timing, because you can construct wonderful stocks like this. So this portfolio here stacks up pretty well on average. Right, so it's nicely undervalued, good growth rate, got some good things going in behind it. When would you look to buy these types of stocks in a portfolio? And at this point, this is where you need to understand market timing. Right, so I'm not going to get into this in a lot of detail in this webcast here, but I want to show you, if you click on graphs and where you go to stocks and the drop down, you can load up market timing. In our market timing, our most conservative signals are our confirmed calls. Right, so there it tells you it's a good time to consider going into the market. Here is a good time to consider going into the market currently. So if I go back, in fact, let's go here, the 11th of, most recent one, 11th of November. So if I go back to my portfolio on the 11th of November, so I'll bring this date box back. There we are, 11 November. See the green light, confirmed signal. That's when I could consider buying the company. Now, this one here would currently have a sell rating, so I wouldn't necessarily go and pick this one up. So what I'll do for this one here is I'll just take this one out at that point in time. Right, so I do my analysis. I've run through it all. Does it all stack up? Let's make sure on the 11th of November. Makes sense. So we're now going to time up our timing. So make sure our market timing stacks up. All right. CI nice and strong, good. EPS, look at that, going gangbusters. That's when I'm going to look to get in. Now, you couldn't see what was going to take place. You could only see until that point in time. So if you're going to build this today for yourself, this type of methodology, you can't see what goes into the future, but you can see currently what's in front of you here. Great set of earnings, great. Technicals, yep, we had a bit of a breather and just starting to turn the corner. CI, yep, CI is holding steady. Good. Value, yep, nicely undervalued, good upside room to move. All right. So at that point there, this is when we could consider getting in. So we've got this wonderful tool here in VectorVest called Quick Test. So I'll quick test all, just give us a quick performance return. 11th of November 2020. So we lined up our market timing. We built our top fundamental and technical stocks. Eureka, look at that, 19%. All right, that's how you do it. All right, so you're finding those good quality companies, you're then lining it up with market timing. Don't make the mistake. Too many new investors make this mistake. They get really excited by the wonderful tool of Stock Viewer, or should I say of watch lists, and they populate some wonderful stocks, but then they buy in like here, or buy in here when the market's falling away. Line up your market timing. If you can do that, if you can go and build those good quality portfolios like I've shown you, and then line it up when the market's rising, then you're putting yourself in with a very good chance of making money because you're getting market timing in your favor, you've done your fundamental analysis, and you've done your technical analysis, and you bring all three together. All right. I know there's schools of thought out there where you get purely technical investors, you get purely fundamental investors, and then you get people that put the two together. I've never come across anybody that puts all three together, and that's what attracted me to VectorVest. Where I chose to work with VectorVest, I approached VectorVest, and my father and I approached VectorVest and said, we'd love to represent you here in Australia because we just really love your product. Amazing set of tools. All right. The mistake I was making when I was a younger person in my 20s and now my 40s, when I first started investing in my 20s, the big mistake that I made is I was purely a fundamentalist. So I'd be picking on companies purely for fundamentals. I wasn't looking at the technicals. I didn't understand what technicals were, let alone market timing. So put all three in your favor. Now, I'm going to throw in a few extras in here for you because this is interesting now to go and have a look at. Let's go. I'm going to graph all the companies here. So, whoops, graph all, here we go. And I want to throw in one or two extras for a bit of fun here, just to give you some peace of mind in terms of your analysis. So we can see the earnings are going well, we can see the technicals firing up. What drives those earnings? So in VectorVest, I'm going to throw in this really useful parameter here, add parameter, and then VectorVest fields, and then I'm going to go to this one here called NPM, net profit margin. I'm going to open it up, and I'm going to put this one on. And I'm going to make it jump out just a tad. Right click, change the style, just make it just stand out just a little bit easier on the eye here. Okay, so what is net profit margin? For every $100 of sales or $1 of sales, whatever it might be, $1 million of sales, what is this company making in terms of profit? This company is currently making 41 cents in the dollar profit. So after all the expenses and whatever have you, on average around about 40 cents in the dollar. Wow. It's like a money printing machine, right? For every $1 of sales, it makes 40% profit. You know, there's a lot of businesses out there that are happy to make 6 or 7% profit, right? In terms of their capital hurdle requirement, rate of return requirement, all right? 40 cents in the dollar. Phenomenal. That is why this company's earnings are going gangbusters. All right, that helps explain it. Now, if I show you a net profit margin of 40 cents in the dollar, if I'm making 40 cents in the dollar for every sale I'm making, guess what? If I'm the CEO, I'll be saying I want to make as much sales as possible because while we're getting 40 cents in the dollar for every sale, we should be maximizing our sales, should we not? Because it may not always be that way. Right, so add parameter, and I'll come into here, sales capital, and we'll put in the sales. In millions, yearly in millions. All right, this is Australian dollars for this example, and right click, change type, make it an area, and bring it back a tad, and let's just make it jump out a bit. I'll change the style here. I'll just make the color a little bit different too. How about that? Just to jump out. This might be a bit easier to see. All right, here we are. So sales are going up. That's what I want to see. Sales are going up. Net profit margins going up. Guess what that does to earnings? Yep, you got it. Earnings going up. Guess what that does to price? Price goes up. That's what I'm looking for when buying companies, right? Using the power of VectorVest. I want to make sure that my earnings are going up, and as a result, my sales are going up and my net profit margin. Now, sometimes you'll get earnings going up, but your sales are sort of flat, but the net profit margin is going up. That's okay. Earnings are still going up because although you're not necessarily selling more, you're selling, but what you are selling, you're selling at a better net profit margin. Sometimes you see the inverse. You'll see net profit margin going down, but you'll see sales going up. So the sales are offsetting the decline in margin. Why not have the best of both worlds where you've got a rising set of sales and a net profit margin? All right. Now, for those of you dialing in from the US, VectorVest United States, you've got, what's it, 8,000 shares in the VectorVest US database. So it's not too hard to find, at least 10, all right, of those very quickly. All right, so if you get stuck for looking for that in Australia, you can always consider looking at the US market. Will give you access to the US, Canada, Europe, UK as well, for example. All right, so here we are. Mineral resources, same deal. Earnings going up. You can see sales going up, net profit margin going up. right? The spot price is really on commodities really helping our mining companies at the moment. Codan, so they sell a lot of electronic goods online. You know, like Australia's kind of version of Amazon, if you wish, or at least getting there. So Codan's net profit margin going up and sales going up. Yep, explains the earnings currently. All right, so we keep going on. So Oz Minerals, yep, same deal there. This one here, turning around. Their profit margins, it was underwater for a while from the looks of it. Let's bring my date line on here. All right, so NPM was negative and now it's turned the corner. It's now positive. Wow, look at that. Huge turnaround in the net profit margin. So this company was quite badly negative at one stage, negative 14 cents in the dollar, was losing money, and then something happened, right? And net profit margin turned around. Sales kicked up, earnings turning around. Okay, I'll just pull that back. So 5 years or in recent times, zoom it in here. All right, this one's probably one of our weaker ones in that list. What's this one here? Phoenix Resources, earnings turning around, net profit margin just tweaking up a bit, but sales a bit lumpy. So I'm going to jot that one down because that might be one I might just want to tweak up, right? Consider taking it out. So FEX, a little bit of a question mark. Net profit margin, yeah, holding steady. Sales just sort of holding steady too. So that little bit of a uplift here is helping on the net profit margin. So there are two weakest links, OBL and FEX. So it's up to you how you really want to cut, slice, and dice. I'll take that out because I'm seeking perfection today. Right, 2, 4, 5. Right, it's not about loading up as many stocks as possible. It's about analyzing. In this particular case, our clinic here, it's to analyze to find some of the best stocks. Now, one thing that does concern me a little bit, if I was picking stocks, a lot of these are in the materials industry. There's the materials, and there's the materials. Oh, actually, it's not as bad as I thought. All right, 2 in the materials, it's okay. Information technology, good. So we do have some diversification, and then we've got industrials. All right, so it's not all sitting in materials. That's good. All right, let's go down to the bottom, and I think we've now perfected our analysis. There is the final polished product. Earnings textbook, sales textbook, net profit margin. Wow, look at that, 25 cents in the dollar across those companies. All right, and nicely undervalued too. There it is. That's my final, what was it, 5 or 6 that we got here. All right, 5. All right, again, it's not advice. Please do speak to your financial professional. The last thing I want to leave you with before we get into Q&A, in fact, there's two things I want us to look at. I'll just move my camera back onto me. Transition, there we are, should pop up. All right, what I want to do here is I want to now benchmark these stocks. Right, so I'm going to jot these down. FMG, MIN, CDA, OZL, and AVA. Okay, here's a bit of fun. Let's do this. Let's graph the current stock. So we'll graph Fortescue Metals. Okay, maximize it up here. Where it notes stock, I'm going to drop down here and click on performance. So this is going to allow me to benchmark. Right, so here's the steel benchmark against Fortescue Metals, highly correlated as you would expect. But what I'm going to do here is I'm going to now benchmark against the other players that we've identified in our shortlist. So MIN, so I'm adding them in, CDA.AX for Australia, OZL.AX and AVA.AX. Enter. All right, now this is where the fun begins. Watch this. Let's benchmark all of our top 5, and we'll go back, say, 5 years. So this is going to compare the relative performance all at a common starting point. So in this particular case here, VectorVest is crunching the numbers, and it's saying, all right, if everybody was equal in terms of their returns as of 5 years ago, this is the relative performance as of that starting point. So we're all starting at the starting point. The gun goes off, the race begins, and your winner is, it looks like, is that CDA. All right, CDA is your winner, followed by, is it Fortescue Metals? Yep, Fortescue Metals, second place, etc., etc. So your underperformer relative to the top performers has been AVA. And again, that's quite telling. So you might say, well, do I don't know, I want that in my portfolio. But in terms of those percentages, look at that, phenomenal percentage returns there over the last 5 years. Min and CDA in the thousands of percentage point returns. All right, so there we are. So you could go the other way. You could do it too. Is you can go back 5 years. So if I click on my date box here, click on the date box, go back 5 years. 1, 2, 3, 4, 5. We'll keep it around about November 11th, I think it was. We had it there. Look at that interesting coding was sell at that stage. But nonetheless, let's quick test all at that stage. And look at that. So look at that, 1200 for CDA. You know, going back 5 years, 1200%, phenomenal. Fortescue Metals, 800, 300, 745. Remember, we noted on the benchmark, AVA seemed to be your laggard at times. So my final bit of analysis today will be as follows. Let's take this one out and not risk it. All right, on the benchmark, it didn't stack up, and on a quick test over a longer time period, it might be stacking up currently, but we'll leave it out. So there we are. Out of all those stocks you've given me, here comes the final graph. All right, 21 versus 34 for value, RVRS, very good scores. RT, great. VST score, nice and strong, high CI score. If you're after dividends, you are getting a healthy 3.5% dividend yield on those stocks. All right, view watch list average graph. Here we go. So here is our finale. Before we get into the questions, here we are. So we'll now compare it. All right. So this was our final result compared to our initial one that you'd given me today. So whoever gave me those 4 stocks, well done. Oh, it might have been several of you. All right. So let's compare. Right. That was a starting point. Do you like that? All right. So I don't know. Let's just pretend we were an investment club, and that was the group of stocks that we were looking at collectively, and then the investment committee says, all right, after all of our analysis, we've deliberated and spent a bit of time, and we're pleased to present to the group our final findings. Here we go. Which one do you prefer? All right, there it is. All right, so hope you enjoyed that. So it's a good bit of fun, isn't it? The other thing you can do too, remember how we mentioned, all right, it's fun because it's easy to do, but what's more rewarding is to get the money in your bank account when you're successful, isn't it? That's the whole point of investing. We want to make money, right? Have a look at this, 20th of May. I haven't covered this today, but I'll just show you something here for those of you that are new. You see how we did the analysis ourselves. VectorVest, when you first click on viewers, you've got this tool here called Stock Viewer. So what Stock Viewer does is it fires up the best fundamental technical stocks for you each and every day. Now, right, if I click by VST, I'm sorting it by the biggest companies here. All right, so here we go. Look at that. Surprise, surprise, Fortescue Metals, the top. Mineral Resources at the top. Surprise, surprise. So there, I think there were 2 that we had, right? It does it for you every day. So it analyzes, ranks, and sorts the best fundamental technical stocks at the top list for you. What you can do is you can then line it up with your market timing. All right, 20th of May, VectorVest, what were some of the best fundamental and technical stocks? All right, here we go. Let's go back to the 20th of May when we've got the entry signal. May, here we go. 20th of May, there we are. Fire up VectorVest. VectorVest then brings up the stocks for us. Here they are. Let's say grab a top, say 20 for a bit of fun here. Now, of course, we would want to go through analysis that I taught you today. You could refine it further. I'm just going to just arbitrarily just grab the top 20. Of course, I would want to refine it further. But nonetheless, look at that. So from the 20th of May until 10 December, look at that, 21% returns. Not all of them were winners, right? You had 1 or 2 laggards down here that stop losses might have kicked out a lot sooner, of course, but 21% returns. All right, go back to our graph again. Where was our last entry? 11th of November. Back to viewers. Now, of course, I'd want to put that into the watch list and refine it further, but nonetheless, just for demonstration purposes here, just a very quick sort of way of demonstrating the power of these stocks without refining them. 11th, so we've run it for the 11th. Quick test the top 20, so just the other day, 11th of November. and we're up 3% so far and counting. Okay, some very good returns up the top, and 1 or 2 letting us down the bottom that our risk and money management rules no doubt would have taken care of. All right, so the final thing I want to leave you with, you might want to go and look at some of our portfolios in the VectorVest system. So these portfolios use a lot of those principles that we've just shown you in analyzing stocks, and these portfolios are being tracked each and every day, and you can see exactly what's being held each and every day. We're not fund managers, we're not brokers, so we're fully disclosing everything that's taking place. Right, there it is. That's how it's tracking. Here's the ETFs portfolio. If you want a really boring portfolio to follow in terms of the amount of work you've got to do, this portfolio, if you're lucky, will do one or two trades every 3 years. Right, so it barely does any trades ever. Annualizes over 15% returns. Yeah, here's our growth portfolio. It's boomed along really well. Income portfolio has been our star performer this year, so you might want to go and look at some of those stocks like that. Wow, it's going gangbusters again. It's up, I think it's up nearly 100% now for the year. Phenomenal. So you might want to jot these down, go and have a look at them. What are these companies here? They look like, are these some of these health-related companies? Yeah, healthcare. All right, well, the top on these, healthcare, industrials, consumer staples, financials, industrials. All right, and it just follows a set rule set that we have set it to follow, and there it is. You can track it each and every day. Safe and sure portfolio. It's been very safe this year. It's sat mostly in cash for a good chunk of the year, protecting those pretty good profits over the years. And then we've got our balanced portfolio as well that you can consider looking at. So you can get some ideas here to see the type of stocks currently being held. All right, so without further ado, let's jump in to the Q&A part of today. So I hope you've got a lot out of that. Thank you for giving us your shares, some really interesting stocks there, and I hope you had a bit of fun seeing exactly how we refined that down. It was good fun, right? To see how we polished it down. A few of you asking, can you give us those 4 stocks again? Absolutely, there we are. All right, so you can go and have a closer look at those. All right, let's see. So question is coming in, being asked a question here in regards, is it too late to buy FMG? Look, I can't give advice, all right, so I've just got to be open about that. But also MIN and other such stocks that have run very hard over the past few weeks, realize EPSs are going up and undervalued, but they have run hard. Here's the beauty of setting up a trading plan. When you get into VectorVest and you start getting into developing your trading plans and testing them and following the system, you won't have to worry about, is it too late, or, you know, have I missed out, because your trading plan will continually keep you on the right path in terms of what you've told it to do based on your testing. In terms of looking to get in, and this is just me, right? This is just me, and again, this is not advice, so you know, I'm not licensed to give advice. The way I use the almighty power of VectorVest, if I'm, say, here now, and I'm looking to get into the market, I say, oh, maybe I should have listened to that confirmed up, but look, you know, as it was, I went away on a holiday and a few things popped up in my life and I just wasn't in a position, or maybe I didn't have the funds or whatever it might be, and now I'm not too sure. The way I do it, this is the way I do it, but this is the way I do it, right? I wait until the next confirmed up, because I don't know, is this the peak of the cycle before the correction? I don't know, you know, is there going to be another pullback before the next cycle again? So if you're conservative like me, you might just say, you know what, this may continue for a while yet. I'll wait till the next confirmed down kicks in, and then I'll get on the next confirmed up, and I'll repeat that process. Okay, so you can see over here, you've had many peak and trough cycles over the years. So, you know, for example, here is an example, you know, oh, I missed out, it's running, I better jump in. You jump in at the last minute and then down it goes, right? So here is a classic case where patience paid off. You waited, and then you got your next set of opportunities coming up. So that's the way I would do it, Victoria. I would just wait until the next confirmed up, but that's me. Okay. Here's another thing too that I love about market timing. When I first started investing, I used to really get miserable when these big down pulls used to take place. Why? Because I was often fully deployed, and often I got in around about here, and then this happened. All right, and then I'd be disappointed with the market, frustrated with myself. How could have I made that mistake? All right, I went through all the motions as all of us do as investors, right? So here's the thing to avoid it now. What I do now is I get really excited when I have a big pullback. Why? Because I know, history has shown me that the bigger the pullback, the more explosive the rebound. Okay, so I always have a bit of cash ready to deploy after a big pullback because I know that the rebounds typically have always been pretty explosive. All right, I can't tell you that that will always be the case. So, you know, when I get that confirmed down, if my stop losses take me out, I do not replace until I get that signal to go back in. Right, so I hope that helps answer that question. Wow, lots of extra stocks coming. I'm sorry if I've missed those, but look, the beauty is you can take it a trial of VectorVest just to show you here for those of you wanting to know in regards to the trial. If you go to vectorvest.com.au, all right, because I'm running this for Australia today, so if you hop along to the .com.au website and you then got that link, risk-free trial, you can click on that and away you go. Fill in your details and VectorVest will look after you in terms of trial. It's risk-free because, you know, if you're unhappy after your 30 days, we'll give you back your $10. All right, I don't think anyone's, well, not that I can remember in a long time actually, has asked for their $10 back. So, yeah, you can then do that. In fact, look at that. Did you see that? I think it's just come in. Wow, you're in luck. Look at this. I think, is it? Yeah, look at that. 99 cents. Yeah, the special offer's just come through. I knew it was coming, and I didn't know if I was going to bring it up today because I just wanted to make sure that was definitely the case. So there you go, 99 cents US, $1.20 Australian, if that. What can you get for $1.20 these days? Can't really get much. Okay, so I'll give you the power of fixing up your portfolio for $1.20. All right, let's see. Questions coming in here. So Peter notes newbie. Great. Thanks for coming along, Peter. Peter asks, how does VectorVest arrive at a valuation for FMG of 38.49 when the consensus value is currently 16.62? Peter, here we go. Really useful. This one here on the Welcome tab in VectorVest. So if you take out a trial, click on this green book on the Welcome tab here, Stock Strategies and Common Sense by our founder, Dr. Bartolito, chapter number 3. Chapter number 3, and it goes through how we gives you a lot of insight into how we calculate the valuation, right? So one of the key drivers behind valuation is earnings, as we saw, and earnings growth rate, right? So that earnings growth rate is a staggering 27%. The other key drivers behind valuation calcs is inflation and interest rates. All right, so if I do this, again, don't worry how I'm getting here, and I don't want to get into a lot of detail on this today. It's because I just want to keep it fairly high level, but your T notes and T bills for interest rates and your CPI for inflation. So if you look at where we are, both for interest rates and inflation, we're pretty much at all-time lows. So that bodes really, really well for stock valuations. Low interest rates, cheap to borrow money. A lot of businesses require the borrowing of money. Cheap interest rates will help you, and low inflation, it's good for businesses, good for their valuations because the costs of production going in are not going to be commanding ridiculous prices when inflation is running hot. All right, so read chapter number 3 on that. Sorry to just leave it at that. I'm not doing it justice unless I point out chapter 3. Chapter 3, it's only about 10 pages, but it'll be some of the best 10 pages you've ever read on company valuations, how we do it at VectorVest. Victoria asks, JB Hi-Fi, could you please give an example of what you're looking for to buy back in terms of timing? Is it RT through 1? How would you assess to buy back in? Asks Toya. All right, so if I go back to JB Hi-Fi, so it's out of my list, right? So let's just say I wanted to consider going back in. All right, so here's JB Hi-Fi. When would I consider? Here's the key one. Go back to graphs. The one I'm looking for here, right? So new one here, stocks, market timing. All right, that's what's going to dictate when I get back in. So if I zoom it in, when I get my next confirmed up, right? Remember what I noted, I'm conservative, right? So I don't know if this is the top of the cycle or not. So I'll wait for the next confirmed down, and when the next confirmed up kicks in, bingo, I'm in. If, however, I want to be more aggressive and I want to be more of a trader type investor, when would I look to get in? Yep, and you raised a good point there, relative time going above 1. I can consider when RT breaks above 1, right? Relative timing, where are we at the moment? 0.94. So when it breaks above 1, it starts to climb back up. I like the earnings. So what I want is I want to make sure that the price that's falling away, I want to make sure the price starts to come up along with relative timing. All right. Okay. In terms of more questions, and I did note actually on the agenda, so I do want to cover this. We spoke about 4 steps to protecting profits as well. All right. So just a little bit of extra I'm going to throw in here for you as well. I'm going to throw in AMP as a classic example to demonstrate. So let's say you had bought all of your stocks. All right. And now you're not sure when you should sell. I'm going to go back in time because this is a classic case of how to protect yourself. There's been, I'll just transition to this, cut over to this one here. There's been too many cases where this has happened to investors. They've got in at say $5 or $6 and it's gone down to $2, and they're nursing a loss, a big loss in some cases. I don't want this to happen to you. So how do we avoid this? How do we avoid this? What I want to do here is when you load up a graph, when you're in VectorVest, graph layouts, load up the VectorVest layout, right? Graph layouts, VectorVest layout. That's a layout I want you to load up. And then what I want you to do is I want you to do as follows. So let's pretend we're in AMP and we're in at, say, this point here. I'm going to talk about Dr. DeLito's 4 steps to protecting profit. So I've loaded up on graph layouts, right? I've loaded up here the VectorVest layout. And I just want you to click on REC, right? The buy, hold, sell rating. All right. So buy, hold, sell rating, and I'll show you what the buy, hold, sell means shortly. All right. Buy, hold, sell rating. What are we looking for here? All right. Step number 1. Price starts going against you in direction of volatility. So not too much volatility. Here we get volatility. So it starts to fall. Now it really starts to fall. All right, so here you're getting price and direction going against you and some volatility. That's step 1. Step number 2. Price goes through the 40-day moving average. Right, so you see on this VectorVest layout here, we put in a 40-day moving average. It's a simple moving average, right? So each day has the same weighting. It's a simple moving average, a 40-day moving average. Price goes through the 40-day moving average. That's step 2. Step 3. Relative timing goes below 1. There it's bang on 1. Our momentum, remember that? There it's still on 1. Uh-oh, it's gone through below 1. You've got 3 steps now. Price and direction against you, 40-day moving average against you, relative timing below 1. Now at this point, I say to myself, 3 strikes, I'm out. I'm not going to wait for the 4th step. As far as I'm concerned, 3 strikes, it's good enough for me. I'll move to the sideline and reconsider at a later date when it lines up again, right? If you want to wait for the 4th and final step, right, it's this one here, REC equals sell. So how do we get a REC equals sell? It's where the share price falls through the stop line that we calculate each and every day for every stock. And how we calculate that, it's a 13-week moving average of the share price adjusted for the fundamentals. Right, so where a company's got bad fundamentals, we're going to keep a tighter rein on that stop loss. Where a company's got good fundamentals, we understand a couple of companies there have a couple of bad days. We all do from time to time, so we're prepared to give it a bit of leeway, right? It's like having your star performer employee. If you run a business, he or she may have a 1 or 2 bad days. You don't dismiss all their prior good work just because of 1 or 2 bad days, right? It's the same with the stock, right? Whereas if you've got a bad performer, that has consistently not done their job very well and been a difficult person to work with, all right, and then they have a couple of bad days, at that point there you say, oh, hang on, we might have to part ways, right? All right, we're doing the same with the stock. We're saying, well, with the stock here, the stock had a very good track record on the fundamentals over the past. So we gave it a bit more leeway, but as that price started to converge, at some point, we've got to say enough's enough, and at that point there, it crosses through the stop, a sell rating lights up. Okay, so that's your 4th and final step, right? At that point there, I'm out. Now, when would I look to buy back in? We're going to do the exact same exercise that we've just done to find our stocks. Put on your earnings. Here we go. All right. So at this point here, I'm looking to get in. I want to get in when the share price goes up nicely and I've got a smooth left right rising set of earnings. Well, the earnings have just continued to fall. Uh-oh. I'm not getting back in. Where have I got a nice, smooth, consistent set of earnings? I haven't. I'm not getting back in again. All right. Let's bring up another famous example here in Australia. So for our international attendees today, Telstra, our big telco company in Australia. A lot of people have held it over the years for its dividends. It pays incredibly good dividends. Pretty much pays out everything it makes in money. So if I put in dividend yield over the years, you can see here, look at that, and that's what it's paid, anywhere between 4 to 9%. All right, so it's paid out practically everything it's made in the telco industry. Some analysts have said, maybe Telstra should invest more into its technology and not pay out as much in dividends. All right, so there's that sort of debate going on out there. But look, as an investor, all right, if I was holding this for the dividends and I start to see the earnings starting to decline there, I want to be careful, right? Why am I still holding on for the dividends? Because I'm going to get a lot more taken away from me on the falling share price. So here we go. Let's apply doctoredly those 4 steps, right? So VectorVest layout, let's practice this one last time. VectorVest layout, let's go back to when it started to decline here. All right, here we go. Let's pick any point arbitrarily. All right, so let's say we are in here. Wow, it's been a lot of volatility. So huge volatility. Price starts to go against me again. And at this point, I say, you know what, this time around, I'm going to apply the 4 steps. This is just getting too wild. All right, so the 4 steps start going against me. Step 1, all right, so I'll zoom in so you can see it. So price and direction, horrible volatility. Price through the 40-day moving average, second step. We're on high alert because the technicals are falling. All right, so we'll follow it through a bit. Here we go, up, and technicals below 1. It's through the 1. I'm 3 strikes, I'm out. I've had enough. All right, I might say, whoop, I'll park myself at the sideline and wait. Now, as it turned out, all right, being volatile, it sort of came back up. Technicals lit up again. Up, it starts coming up again. But for those of you keeping an eye on things, you're looking at this going, but these earnings are sort of starting to lurch a bit, sort of it's not quite, it's sort of starting to trend down. So you're starting to see some early warning signals that, you just need to be careful, but nonetheless, right, so we're going to keep going, applying the 4 steps. So let's go on a bit more. So we hang in and go, oh, okay, it came back up. That was a close call. Uh-oh, it's doing it again. Through the 40-day moving average, price, massive volatility through the 40-day moving average, RT below 1, I'm out. All right, or if I want to wait to the 4th step, REC equals sell. Now, at that point, if you got out, put your earnings on. Now, from that point, when would have you bought back in? I want to see a rising set of earnings along with the share price. All right, you haven't got back in. All right, so there's the power of your 4 steps. So applying that the 4 steps there. Let's do this. Let's close this out. So I'll take these 2 out because we use these for demonstration purposes. All right. So this was our refined 4 set of 4 stocks. Let's run the graph on them. All right. Let's apply our 4 steps. All right. So graph layout, VectorVest layout. There we go. And let's just take off our drawings, clear all lines. Let's just clean it up. All right. So tell me right now, 4 steps. Step 1, price and direction. No, it's going up. Step 2, through the 40-day moving average. No chance at this point. Step 3, relative timing below 1. No. Step 4, REC equals sell. No, still a buy rating. All right, so none of the steps being met. All right, next one here. Price and direction, no. 40-day average, no. RT, no. REC equals buy, so not a sell. No, none of the steps. What about this one here? A little bit of price and direction, but I don't know. I can't quite sort of call it yet. So I'd say no for 40-day, no for RT, no for REC. All right. This is interesting. So Coden, price and direction, yes. 40-day moving average, yes. RT below 1, yes. It's 3 strikes, or is it? Let's see right now at this point in time. Whoa, just hanging on by a thread. Nearly about to get a third strike. All right, so this is probably your weak link at the moment, Coden, as it stands. All right, so there we go. There are the 4 steps. I find it a brilliant technique. That helps me. Let's see here. Broderick asks, would RSI indicator be a good way of timing the market? Look, the RSI is a great technical indicator. I like it. You know, you can set it at different levels. I think if it's above 80, it's telling us that it's overheating, and if it's below 30, then it's a good time to consider buying in because it's oversold. So you can certainly come in and overlay those, but the techniques I've shown you today are my preferences. But just to show those of you that are looking for technical type parameters, our parameter technical analysis, we've got our RSI indicators, and you can certainly overlay them onto stocks as you see fit. Okay, so you can see here, here's our RSI. All right, so typically around about 30, that's where it's bottomed out, and around about 70 or 80, that's where it's topped out. You can certainly use those. We give you all that analysis. But in terms of RSI, look, I like it, but I think this technique I've shown you here today, finding those stocks with the rising earnings and the good GRT and the good rising sales and net profit margin, that's my preferred entry, along with market timing, and my exit 4 steps using Dr. Lido's 4 steps. That's my preference. But it's not to say you can't do the RSI. It's there should you choose. It'd be interesting, you know, benchmark it against the RSI and see how it stacks up. I've had much better success using the methodology I've shown you today than the RSI. Let's see. Okay. Gail asks, not a really question today. I'm on a trial. Can I get a group training? But they are being offered at 4 a.m. AEDT. All right. So look, the good news there, Gail, we have a onboarding team, so consultants in Australia. So if you want to call our toll-free number, 1-800-303-782, and then request for our team to put you in touch with our onboarding team in Australia to set up a time. It's going to be the quickest way. All right, so our team's open till 2 p.m. Sydney time today. So if you give them a bell, our team will then make sure that you get one of our Australian consultants to train you up, and we'll do it at a time that works for you. Let's see, thanks for your question coming there, Mervyn. I think I've analysed most of your stocks, so thank you for that. I'll get back to you in regards to, you've got some portfolio questions, I'll email you back. I'll just keep it off for this webcast because this is relating purely to stock picking. All right, so yeah, thanks for that. I'll email you back. Victoria asks, can I please look at CIA? All right, let's see. All right, CIA, Champion Iron. I love everything about iron at the moment. I don't know how long that spot price is going to last, but while it's booming at $140 odd a metric ton, a lot of these companies heavily into iron ore and the likes are certainly powering on. All right, so let's apply our techniques. Here we go. Exactly like what we taught today. So here we go. What are our earnings doing? Yep, they're going up. Good. What are our technicals doing? Yes, they're currently going up. Great. What is our CI? I like to look at the comfort index as well as CI. So we're doing it for an individual stock now. Yep, CI is above 1. It's telling me that that's good. All right. All right, next one here, value. Let's throw in the value, capital appreciation. I just want to make sure I'm not paying a huge premium. Right, it's undervalued. Right, so yeah, I like it. It's buy rated. All right, so the question there is also what constitutes a buy rating? So just answer that one there, Victoria. Again, not advice. Not licensed to give advice, but using VectorVest, it stacks up very nicely. All right. Now, in terms of what constitutes a buy rating, VST must be above 1. All right. So if I add my VST parameter, so remember that. So fundamentals and technicals put together on a scale of 0 to 2. So there, VST above 1. All right. The other thing that must be above 1 is our technicals, because as the saying goes, you know, timing is everything, right? Timing is everything. So, you know, I want to make sure that my timing is stacking up. So to get a buy rating, technicals must be above 1, all right? And then the third one here, which often catches people out, and that is that the price must be diverging away from the stop, all right? So that stop that we calculate each and every day we want to make sure that the price is diverging away from the stop. Otherwise, you run the risk of it breaking through the stop, which then makes it become a sell rating. All right, so price must be diverging away from the stop, and it certainly is. It's pulling away from that stop line. All right, and then of course price must be above stop, otherwise it would be sell rated. There we go. So that's a buy rating. To get a hold rating, well, your price must not have broken through the stop, because if it breaks through the stop, then it's a sell rating. It's basically everything except for this one here, where price has broken through the stop is being met, except one. One of them is not being met. So here, if I zoom in here, a hold rating. Why is this getting a hold rating? You know, earnings are going up, VST is above 1. You know, what's the issue? The technicals are above 1. You know, this is a good stock. Why are you giving it only a hold rating? Notice what's happening here. Price is diverging toward the stop. Then it turns around, it converges away, I think that's the term, right, from the stop, even though the stop's going up, but it's pulling away. And welcome back to the buy club. A buy rating lights up again. Remember, I noted that this is a noun, not a verb. Right, so I like the fact it's a buy rating. It tells me straight away VST is above 1, RT is above 1, price is diverging away from the stop. It doesn't tell me whether it's over or undervalued. It doesn't tell me whether my earnings are going up. Right, so this is where, you know, per our technique that we looked at today, that's where I like to come in per the stock clinic and just tighten things up. All right, so yeah, a few of you are just seeing on the box here, you're noting, can I just bring up the average line again? Yep, here we go. So I'll pull it back over, say 5 years. So there we go, look at that, earnings, price. You know, you're saying in terms of, yeah, the 4 steps, yeah, what do you imagine, right? Yeah, there's no chance. This is from a portfolio perspective, right? Price not falling away, above 40-day, RT not below 1, and I can't give you the rec across the portfolio because some might be buy, hold, sell, whatever it might be, so we can't give you the rec, but you can see that we're certainly meeting all the other criteria, and if you look at them individually, we either buy or hold. Okay, so Cliff asks, growth rate is projection. Who determines variables used in the algorithm? Cliff, there's a lot of mathematics behind that. So again, it'll be in that green book. All right, so in the green book there, whoops, on the welcome tab, there we are, that's the one I want. So it's in the, have a look in there, we cover it. If you need more insight, please give us a team at support a call. Sorry, there's a camera. I'm looking at the camera. Am I on camera? Yep, I'm on camera. Give our team a support call, and we can give you some further insight into it. Okay, let's see. Let's see. Carry notes, a repetitive methodology, but enjoy the refresher, consequently improving my performance. Thanks and well done. No problem, Kerry. Glad you enjoyed it. Eve asks, thanks for a great session. Would be great to do this for US stocks next time. Well, how about that? All right, I'm happy to do it. I'll set up a session in the new year, or maybe you could squeeze one in before the end of the year. How about we do this exercise for US stocks? How about that? Believe you me, when you do it for US stocks, if you think it was easy for Australia, it's even easier for the US. Because when I get into some of those big stocks, likes of Microsoft and Apple and Facebook, they're just ridiculously good in terms of some of those earnings profiles and price patterns and whatever have you. Patricia notes, if you want to follow the basic techniques of buying the best VST stocks, what is the minimum amount of stocks that we could have in a portfolio in the Australian market? I find 10 or worst 20 stocks to be a bit too many in terms of brokerage fees and work. So I was hoping I could have VST driven portfolio with less than 10 stocks. Well, you know, in this particular case, for example, we whittled it down to 4. All right. Now, I'm not saying that you put your life savings or whatever you're looking to invest into 4. That would be reckless, right? Because if you've got $1 million, you're not going to put it across 4 stocks. But in terms of sizes and that, it just depends, you know, what you're looking to invest in. And VectorVest here, we're saying do not risk more than 1% of your total investable capital per trade. All right. So you need to sort of work that backwards to see what you're comfortable with. Just to demonstrate that to you in terms of what works, the SMSF balanced is a 5-share portfolio. So it's currently got 132,000 in it, and it's working very well using very prudent risk and money management rules. All right, so it's a 5-share portfolio. All right, so that gives you some appreciation. So there you go. All right, again, I'd need to go and back test and stress test to find what an optimum amount would be. But over the years, we've shown that between a 5 and 10 has performed best in Australia. Right, so for the Australia market, between 5 and 10, if truth be told, 5 has actually outperformed better than 10 on many occasions. Just pips the 10 share portfolios on average. So then you might be saying to yourself, but okay, but why then are most of these 10 shares? It's for diversification purposes, and also for the fact that some of our subscribers, of course, are not comfortable putting, let's say, $500,000 across 5 shares. So hence a 10 share portfolio. All right, I notice a definite degradation over 20 in terms of the returns, and the level of trading gets a little bit too much at times. All right, so you're right. I don't really go much beyond 20, just because I don't think many of our subscribers would like a portfolio that does, 5 trades a month type thing. It's too many trades for most people. All right, let's see. Next question coming in. What EPS data is your system looking at? Min Resources, which is a main stock of your analysis when looking at the underlying forecast profits, they are expected to decrease substantially in the next 3 years. Does that invalidate all these analysis? Remember that the EPS is looking 12-month. It's a 12-month rolling forecast on earnings. So again, if you get a chance, if you take a subscription, have a look in the green book, all right? And please call our team 1-800-303-782, and they can spend a lot of time giving you a lot more insight into the earnings figure, all right? So I think you were talking about Min. So if I fire up Min, here we go. All right, there we go. Let's bring it up. All right, so the EPS still going well. Here's your telling point. All right, so you mentioned, yep, they're possibly looking at some issues down the track. Well, I can see the growth rate. Wow, look at that, the growth rate there at 84%, looking to grow their earnings by, but you're definitely seeing it slowing down. So that concurs with what you're saying in terms of a slowdown, but still, that's still driving those earnings very nicely. Not as explosive, based on what the growth rate is. It probably won't be as explosive, but still, if you can find companies doing that in the short term, great. But like I said, I think earlier I said there's no company can continue to grow its earnings by 30% indefinitely. And the reason why I know is because years ago I was sitting at a front row seat at a lecture in one of my corporate finance papers, and lovely professor there, but he was known to play a few tricks on us. And he said to me, "Mr. Markham, can you tell me whether," I can't remember what stock it was, that I think it was Cisco, I think it was, Networks or whatever it was called in those days. Is Cisco going to be able to grow its earnings at 30% for the next 25 years? I didn't know. So I kind of guessed. Yes, I think it will. He said, pull out your calculator, Mr. Markham, 1.3 to the power of, I think it was like 25 years or whatever, and then multiply it through by the current market capitalization. My calculator giving an error, it can't work it out. Because it's impossible. No company can keep growing its earnings indefinitely. It'll be bigger than the top 3 companies in the world combined. Do you think that this company is going to be bigger than those 3 combined? Oh yeah, good point. Right. So I think the point is there that I don't think that any company is going to sustainably grow its growth rate indefinitely at 30%. So I agree. It's heated up, but while it's heated up, at that point, that's where the money is to be made. Look at that. That's where the money gets made. Find those companies where those growth rates are going. I'll just reset that, going gangbusters. Okay, another question. Let's see here. I'm really interested in your system, but can I have an answer to my Min question? All right, so we've answered that one there. Let's see. Please have a look at JHC. All right, let's do that. We've got an empty slot there. All right, JHC. All right. Okay. So, you be the judge, right? What's the growth rate? It's negative, right? What's the earnings? It's coming up, but it's pretty anemic relative to some of the other companies we've seen. You can see for quite some time it's been declining, right? So that's telling. Okay. Where's the value? A little bit overvalued, but neither here nor there. I'm not. Sorry, I'll zoom in here. I'm not too concerned by that. It's neither here nor there. But I don't like the fact that you've got negative growth and negative earnings. All right, from a technical perspective, it looks to me, in my humble opinion, that it lifted up based on the technicals more so than the fundamentals. All right, here's a very telling thing I'm going to show you. Notice what happened here. What happened to the market overall? I'm not talking. This is not an entry signal for the stock. This is the overall market. The overall market, remember that, on the 11th of November went up. So it looks like by default, you know, as the saying goes, you know, a rising tide floats most boats. Remember that when we went back to our stock viewer on the 11th. And let's do this on if I go to our top stocks on the 11th of November, remember there was an entry signal to the market. Remember that? All right, so if I quick test those, all right, the rising tide floats most boats, right? Up it goes, 20-odd%. If I were to throw that one in, so what was it, JHC? Let's throw that one into our mix, right? So let's pretend we refined it down to 5 and JHC was the one, which it wouldn't, but let's just pretend it was. All right, let's quick test all. So I'll take JHC in the mix. All right, so it rocketed up. The technicals, wow, look at that, it outperformed some of our ones there. It performed them all. Just be careful because the earnings are not, you know, they're not rock solid, all right, compared to the others. So if I look at the overall trend again, it's interesting. Even if I throw JHC into it, doesn't. It's probably pulling down on the growth a little bit, but it's changed the profile a little bit. If I take it out, let's take this out. All right. And remember the way I've built this, I'm being ultra conservative, right? Okay. When I take it out, it just now it's a better set on average. All right, so up to you. You know, I can't give advice, but you know, I like the fact that earnings are starting to turn around. Hopefully it now breaks and starts running hard. But you know, just be aware, it's not as strong as some of the other ones that we looked at today. Okay, let's see. Patricia asks, would it be appropriate to replicate the VV portfolios with 5 stocks only when they have more than 5? Look, you can, Patricia, and I know a lot of our subscribers have had a great deal of success taking some of the portfolios that we show, you know, the 10 ones with 10 in them and whittling them down to 5 and rerunning the back tests. And they've had some pretty phenomenal results. All right, but the reason I've left them at 10 is just because I'm again being conservative. So there's plenty of stocks to spread one's capital across should one choose. All right, so I think we got a lot out of this. I got a lot out of it. Wasn't that interesting? What we whittled that down to, those 4 there. It's good fun. You know, do the exercise for yourself. What do you whittle it down to? Maybe you start with a bigger tranche of shares and see how you go. Can you get a profile that looks smoother than this? I'm sure you could. All right, this one's pretty good. I must admit, I'm quite happy with that one, but I know there's better. You can make them better. All right, a little bit of lumpiness on the price there, a little bit of lumpiness on the earnings here. All right, you could probably get it better, but if you get profiles like this, you're on to winners. Okay, so I'm just checking my chat box and all the questions. I think we have answered them all. My apologies if I missed anybody's question. Thanks again for coming along. And for those of you attending on YouTube, it's the first time I've done it live stream on YouTube. Hopefully all the technology worked as it should. And I'd like to thank everyone for coming along. Great. Keep posted to the emails because we'll do another session. Where have I got on my calendar here? We'll plan a 16th. So December the 16th. So that would be, for those of you coming in via the US, that would be your 15th, I believe. Your 15th, Australia 16th, we'll do it again. And then I will run a stock clinic for America. How about that? That'll be a lot of fun. All right, so I'll wrap it up here. I'll turn off the transmission now for YouTube, and I'll make sure I mute my mic as well. All right, thanks again. Hope you got a lot out of it. Bye for now.